All right, this is Lige. I just want to make a video covering two things that you can add to your trading, and these charts can be pulled up on almost any charting platform, and they'll kind of give you the red or the green flags, if you will, for the market and when it's safe to invest and when it's not. So, number one is going to be the VIX, and this is known as the Wall Street's fear gauge. So they measure the implied volatility of the S&P 500 options over the next 30 days. So it tells investors how much movement the market is expecting in the near future. And the best way to interpret this is below 15 signals investor complacency and market stability. And above 20, 25 indicates growing anxiety, uncertainty, or fear, which often precedes market downturns. So investors use this to gauge risk tolerance and as hedging tools to protect their portfolios against sudden dramatic drops. So when the VIX is up, they're expecting the market to drop. When the VIX is down, they expect the market to be complacent and continue whatever trend it's in. Um, Another good one is going to be the 10-year TNX. This tracks the it's actually a debt instrument. It's issued by the U.S. government, and its yield is the annual rate of return an investor will receive if they hold the bond for a decade. And it serves a global benchmark for long-term borrowing costs, including 30-year mortgage rates, and dictates the discount rate used to value companies. So basically, how to read this is a rising yield will signal investor optimism about economic growth and inflation. However, when it climbs too fast, it can pressure stock prices as investors demand higher returns and borrowing becomes more expensive for companies. A falling yield will often indicate economic uncertainty or a flight to safety, meaning investors are moving capital out of riskier assets into stable government bonds. So investors use this yield to value stocks and to predict economic slowdowns. It's essentially a market pulse of what's going on in the market um, and the economy as a whole. So if um, if you utilize these two tools in that matter, it can help you protect your portfolio better. It can also help you with your trading, so you're not entering positions the wrong way whenever these signals are telling you either red or green flags. So if you're interested in learning more of this stuff, my link is in the bio. Sign up, and I'll be more than happy to help. Until next time, thank you.